Hello, my name is Russell Myers. Welcome to Issues Unite. We don't need a stock market. Does that statement shock you? The stock market is useless in real terms. Americans have been indoctrinated, again, to believe that the stock market is crucial to, economic growth. It's not, period. And in fact, it is detrimental to growth. Think back, which would you prefer to have? Would you rather have the volatility or that we keep experiencing over and over? Or would you rather have economic stability and steady growth? You think back over time, what happened in 1929? The stock market crash. What happened around 2000? The internet bubble crash related to the stock market. What happened in 2008? The financial services, the mortgage crisis. It was all related to the stock market. Millions of Americans being laid off currently. Why? And yet the stock market is at record highs, which, by the way, for the last few days, have you noticed that the stock market just kind of went flat? It just plateaued and stopped. Why? Because the stock traders are waiting for another stimulus, thinking that they're going to get all of it. But, so millions of people are being laid off so that stockholders can get paid dividends. You think back over time, and people could walk into a company, to their employer, and they could buy stock in the company, and they owned a part of it. This was employee ownership. And that's pretty much not a thing anymore. It basically doesn't happen. You can buy into your company's 401k, but, they're using that money to invest elsewhere. You're not owning a part of that company anymore. Stocks, you mean that people own a part of the company. Well, instead, if we adjust our thinking, what if we just eliminated stocks completely? Well, then you're going to eliminate all the volatility that is associated with stocks. Yeah, the stock traders, the day traders, and all this stuff, you're not going to have overnight billionaires or what have you. You're not going to have the stock market going up while you're getting laid off and handed a pink slip. What if we just converted all stocks into bonds? Bonds come with an interest related to them. So you hold it for a while and it accrues interest steadily over time. It's not going to lose value. Now, of course, we would have to implement legislation so that if a company declares bankruptcy, downsizes, what have you, then the first people to be paid out when they liquefy assets would be the bond holders? Well, sorry. First, they would have to pay off their suppliers and then bond holders. But your bond would still hold some value. Look at some of the things that have happened just in the past year. Hertz Rent-A-Car went bankrupt, and a judge had to literally stop the Hertz Rent-A-Car from issuing more stock during the bankruptcy. How are they issuing stock during a bankruptcy? Okay? You wouldn't, if you eliminate stocks and convert them into bonds, you wouldn't have corporate executives, you wouldn't have insider trading happening. It would no longer exist. Instead of corporate executives being given stocks as part of their compensation package, okay, well, now you hand them bonds. And if they are preparing for bankruptcy, then they would be legally bound to hold those bonds and be paid out with all the other bondholders. They wouldn't be able to sell off the bonds at maximum value, and then when the bonds crash, then they just skate away. Issuing bonds as opposed to stocks also would mean that before issuing bonds, that there has to be a purpose to them, which would mean such as, growing the company, which would mean, or upgrading equipment, etc., which would mean creating jobs. If the company doesn't grow, no bonds. Turn this into, all of this into loans. That's what a bond is. It's a loan. Doesn't matter whether it's a treasury bond or a municipal bond or a corporate bond. A bond is a loan. It is an IOU. It means I'm loaning you money and you will pay me back. No, you're not going to be paid back. You're not going to make a fortune in 2 days. Most of the volatility with the stock market, you look back again over time, aside from 1929, overall, well, it's always been the big traders, the richest people, that caused the volatility. It wasn't the individual investor with 5 shares of AT&T that caused the volatility. You sell your 5 shares and that's it. It has no impact on the trading volume. But when, Rockefeller sells off 10,000 shares of a company, then you see an effect which causes a crash. I think even libertarians would get behind this idea. And this would level the playing field. It would level off the economy to stop all of the volatility, all the crashes every few years that keep getting worse and worse and worse. Dr. Richard Wolff has pointed out, numerous times that we see a stock market crash every 7 to 10 years. We haven't seen a literal crash since 2008. So we are far beyond, we are way overdue for another crash. The longer we go without it and the higher the stock market goes, while the economy is collapsing around us, the worse the crash is going to be. So one of the best things that could happen would be to prevent it by converting all of these stocks into payable debt. You hold one stock, it gets converted into a bond that holds a certain level of value. Now, I'm not, this would be a case-by-case basis, company by company, because, how much value it holds, would be very much up for debate and equations that I'm really not qualified to go in, to even try and go into, And again, that would be on a case-by-case basis by company. But companies would have to be required to hold a certain level of liquidity that attenuates over time to pay off these bonds. They couldn't just blow money willy-nilly and destroy the company in the process, and the executives walk away with millions in bonuses. It wouldn't be possible. The stockholders wouldn't be able to vote this in, and all the stockholders wouldn't claim their dividends in advance just before paying it off or before laying millions of people off. They wouldn't be able to force this to happen. I pointed out in 2018, when Trump gave the State of the Union speech that said, by the numbers of the Labor Department, that employment was up and wages were up. The very following day, the stock market crashed by 800 points. Why? Because investors, stockholders, saw this as an expense. And shortly after that, companies started laying people off. But as long as the stock value goes up, they call this growth. This is not growth. Not for you, not for me. If your stocks were converted into bonds in your retirement account, you would continue to see a steady level of growth over years. You wouldn't have to be watching and manipulating and paying fees to move your stocks from one area or company to another to prevent losing your entire life savings. This is something that we need to discuss widely. All right? So, and, final note here. Well, I'll get into that in another video. Also, we don't need corporations, period. But that is a discussion for another video. I'm not going into that here because that would be a lengthy one, and I'm already right around 15 minutes. Share this video. Talk about these subjects. Stop thinking that just because oh, this is the way it's always been done, that, this is the way we should do it. No, this is the rich people that benefit from this system and take your money and lay you off from your job that are telling you that this is necessary. It's not necessary. All right? So, share this video, talk about these subjects. If you can, please donate $1 a month and help expand the channel. I'll talk to you in the next one.